Hey guys, Optimus Futures here. We got an educational video for you today on some more footprint strategies, also known as cluster charts. We're going to be looking at support and resistance, and the main strategy is the breakout strategy. The first part of the video, we're going to be going over some theory that includes market structure, market participants, technical support and resistance. And then the second part of the video, we're really going to be honing on the actual strategy, some of the characteristics, and then we're going to be going through some examples in the S&P 500 futures market. So stick around. I hope you enjoy it. So before we get more into the theory, we're just going to do a little primer on what the basics of a breakout is, so everybody has a general understanding. It's one of the most common strategies that newer traders use. It kind of gets a bad rap, but essentially a breakout is there's a technical area where a large amount of contracts are being bought and sold with significant price movement. So it's either going to break down or break up. You want to see heavy volume and you want to see price moving quickly. That's what a breakout is. So although this strategy may seem a little simple at first, it's really not. And just for a little caveat for this video, it's more for people that have a general understanding of order flow. I'm not going to be going into the bare bones basics of what a footprint chart is, what all the numbers mean, and so forth. So for this video, if you are lost, please go back, look at some of our other videos, and get a little general understanding of really just what a footprint chart is before continuing on. So that's just a little caveat for this video. So this is the first part of the theory aspect of the video. It's going to be on market structure. So the market's either doing one of two things essentially. It's either balancing or it's unbalanced, and it's searching for balance. And the balanced part is also known as bracketing. It's just moving sideways. It's not trending in one direction or another. And unbalanced is trending. It's when it's moving up consistently or down consistently. That's essentially all the market does, whether it's on the 1 minute time frame, the 5 minute, the 15, the daily. It's either moving sideways or it's trending in one direction or another. So you might be wondering why this is important when we're considering the breakout strategy. It's because when we're moving sideways, when we're bracketing, consolidating, when we're balanced, all these words mean the same thing. But when we're doing this, it's much easier to see a breakout occur. Also, when we're trending, we don't want to be caught on the wrong side of a breakout. If we're moving up, trending up, we're on balance to the upside, you don't want to be taking breakouts to the downside. So I've talked about this in other videos, but it's really important when we're considering the breakout strategy is that there's initiative versus responsive market participants. There are strong market participants and there are weak market participants. There's initiative buying and selling, and there's responsive buying and selling. And the main difference is, and the one we're going to be focusing on the most with this strategy, is initiative selling or initiative buying. This is when price gets pushed away from a current concept of fair value, and buyers continually step up and buy if we're breaking out to the upside, or sellers will continually step in and sell if we're breaking out to the downside. So essentially what we're looking for with a breakout strategy is we're looking to see strong initiative market participants move price from balance to imbalance. It's basically the beginning of a trending move, moving from bracketing to trending. So support and resistance, it's really the foundation of a breakout strategy. You cannot trade a breakout without first understanding where the key levels are, where price should accelerate or where price should slow down. We cannot trade breakouts anywhere on the chart. It needs to be in specific areas first identified beforehand. So support and resistance, they can change depending on the time frame. A 15-minute time frame, support and resistance, it'll be less impactful if trading on the 4-hour chart. If you're taking your entries on a 4-hour chart, then looking at a 15-minute chart, breakdown or breakout, it might not be as effective unless perhaps you're looking at the daily chart or the weekly chart, and then you take the trades on the 4-hour time frame. A daily support and resistance or a weekly or a monthly support and resistance may be more impactful if you're trading on the 4-hour chart. That's one example. Another example, a 1-minute time frame support and resistance may not be as impactful if trading on the 15-minute chart. So understanding that concept of time frames and support and resistance and how they interact together is really key when we're placing our entries and when we're trading this breakout type of strategy. The last thing I'll say about support and resistance is that it's essentially a place where price has had strong reactions to in the past. This can change. This is a constantly dynamic sort of environment, and it can be trend lines, it can be VWAP, it can be horizontal price points, it can be highs and lows of the day. It can constantly change and constantly be evolving, which kind of makes support and resistance a difficult concept to really grasp and understand. We can't really get into the nitty-gritty details of identifying support and resistance in the marketplace because it changes with every market and with every day. Okay? So understanding and studying support and resistance is a larger topic, but that's all I'll say for it today. It's very important for trading breakout strategies. So the easiest way to identify a support and resistance is in a balanced market. Like I was discussing before, a trending market consistently moving up or consistently moving down, that becomes more difficult to find support and resistance. When we're moving sideways or when we're balanced or when we're bracketing, that is when we can really see support and resistance in an easier way. And really all support and resistance is an area where buyers have stepped up when prices are too low and an area where sellers have stepped in when prices are too high. So a responsive market essentially. So that sort of concludes the more theoretical aspect of this video. I'm going to be moving into some of the characteristics and then we'll go over some real world examples from the ES. So the first characteristic is it's always initiative in nature. You need to understand that. It's always pushing price out of balance. It's not responsive. They're not responding to lower prices or higher prices. It's buyers stepping in at higher prices. So it's initiative. It's typically strong versus weak market participants. It's typically at the beginning of a move, and it's always at a key breakpoint or technical level. Okay, so I found a pretty good example. We're looking at the 5-minute chart on the ES from the 22nd of October, 2022. This is pre-market here. And we have a clear resistance level. We've checked price once, twice, 3 times in this area and rejected off the 369.75 area. So this is a resistance area. This is clearly an area where price has rejected multiple times. Now, we want to be focusing on this 8 a.m. candle here. When price gets over this resistance, this is when we move in to looking at order flow, looking at the cluster, also known as footprint chart, and seeing what's occurring. On this candle, we have aggressive buying that's occurred. This is the buy side of the footprint chart. I'm not going to go over the basics, but as we can see here, aggressive buying stepping up from a resistance area. This is a great example of a breakout. This is what the strategy is. Buyers have initiated buying above a resistance area, broken out, and continued up. It's taken many minutes for the continuation to happen. It's flagged in between that time. Buyers stepped up again and again. We eventually do get a rejection, but a breakout's a quick trade. You get in, you get the follow through, and then you get out. Now this next example I've got pulled up on the screen here. It's from the 17th of October 2022. Happened around 11:55. And now this isn't a typical support and resistance area when we're talking about horizontal price levels or trendline breaks. This is VWAP, an important indicator for a lot of traders. And so when we see this big, huge candle breaking out on volume, breaking above VWAP, this is when we want to go into order flow, into the footprint chart, and see what's going on. And as we can see, heavy buying at resistance. It was under VWAP, all morning, all day, really rejecting. Any time it attempted to even get close to view up, we get a huge rejection. This is the first test of view up, and large buyers come in. Typically, you would expect sellers to come in to a resistance area, but not on breakouts, right? This is initiative buying above a resistance area with buyers stepping in and pushing price up, and we get the continuation. Buyers step up again here, and we continue. That's the breakout strategy in a nutshell. I'm only going to go through 2 examples today. That's the last example. We could go through a bunch more. They happen in every marketplace, but we don't have much time today. So I'll just leave you with that. All these tools are free for Optimus Futures customers. This is the Optimus Flow platform. Like I said, it's completely free. So come check us out. Thanks for watching.